So it's coming true right now. It really deeply concerns me, especially now that I'm going, oh my God, what I was saying 25 years ago is coming true today. And so that's why people have got to understand what goes on in your head, because that's the future now. The future of money lies in my opinion, crypto or Bitcoin and blockchain. So what do you have to say about that?
Yeah, so we can talk for hours on this, so I'll try to summarize it as much as I can. Let's start with Bitcoin. Just a quick summary to first-time listeners. Bitcoin is a decentralized ledger. You can think of an Excel sheet that nobody actually owns, but everybody that has a cell, you can control the money coming out only, and you can receive money. What's also interesting about Bitcoin is it's very, not fixed supply, very, very deflationary though. As more Bitcoins are minted, it gets less and less inflation. And I think it stops around 21 million Bitcoin. And it's not pegged against anything, right? You can say Bitcoin today is $37,000, but it's not really, it doesn't matter. Bitcoin is itself. It's not pegged to any world currency. And as a result, if you have US dollar getting printed as crazy, Bitcoin actually is inversely correlated. So basically, as a dollar value goes down, Bitcoin actually goes up. And what we're seeing right now is hundreds of billions of dollars being acquired by financial institutions. Grayscale being a very prominent one. They own $20 billion of Bitcoin right now. A lot of other funds are buying in the $100 million increments. But what's happening is there's not much supply left of Bitcoin actually. And it's causing an overcorrection of the kind of hedge against the dollar thesis. I think everyone agrees that it is a hedge against the dollar, but at some point it might be overcorrecting it. And then as the vaccines roll out and the dollar gets stronger, if we have a third stimulus, we probably haven't even seen the top yet. Third stimulus would again further devalue the dollar and further give Bitcoin that hedge up. So even the $50,000 range that you predicted a while ago, which I thought was a little bit high, even the $50,000 range of Bitcoin is not out of the question at all right now. Yeah.
And the reason I'm not judging Bitcoin, I'm judging the stupidity of our government. And and being a real estate guy, when I look at how much debt is going to default, and the question is, when all those office buildings around San Francisco can't pay the rent, who's going to bail them out? That's why I put my 50,000 bet. It was a bet against the economy. It wasn't a bet on Bitcoin. And I'm betting they're going to print. I mean, if they don't print, we're screwed anyway. So
yeah,
that's kind of my philosophy. It's not a very sophisticated philosophy, but I'd rather have Bitcoin than dollars right now. That's all I'm saying.
Another summary for everyone else. Ethereum took that decentralized ledger idea. They added a programmable logic on top of that, so people can actually develop code on blockchain. So what you have is decentralized code as well as currency, and people use the first use case is always currency, because that's the most you can take financial applications and put value on it and then transfer it over the chain. But Ethereum in 2018 came up with the ICO concept. You can mint new tokens on top of Ethereum, and that became a huge fundraising vehicle in 2018, which ultimately resulted in a big bubble pop because there was not much utility. There was actually not much adoption coming from that. 2020 though has changed everything. By the way, just to give a reference, Ethereum is up 700% since last year, and Bitcoin is up 300% since last year. So that's just kind of reference of what's going on with the kind of divergence of Bitcoin and Ethereum. But by the way, Bitcoin and Ethereum. So if you want to bet against the government, it's Bitcoin. If you want to invest in the technology, it is Ethereum. But there are a lot of projects within Ethereum that I think are very, very promising as well.
So Ethereum has some use to it, is what you're saying?
Yes. There was a lot of ideas, a lot of technology, scaling, all those ideas came out in 2018 and 2019. The first thing that really got adopted was in 2020, and that was called the decentralized exchange. But a couple projects made use of a concept called automated market making. And basically what that means is you can deposit money in pools, and then people can trade out of those pools. So at any moment in time, I can just go on, use my wallet that has any number of tokens and swap it with other tokens. And there's always liquidity. And that concept in 2020 exploded. It got to the point where there's more volume on decentralized exchanges than centralized exchanges. So that was 2020 was the year of DeFi, decentralized exchanges. 2021 is going to have a whole new sort of a whole new set of services that we can talk about as well.
So
like today, you have to log in, right? You have to log into your E-Trade, Ameritrade to trade a stock, right?
Right.
That whole concept is going away now. With blockchain, you can represent stocks on blockchain and trade it without any, and you always have liquidity.
So are you saying, so E-Trade, those guys are toast?
It's trending that way. Centralized exchange volume is starting to rival the decentralized exchange volume in the crypto space for now.
Wow. So so going old school now, what happens to stocks then?
I think stocks will always exist because they have like fundamentals behind it. They have like actual equity and ownership behind it. What's happening in 2021 is a concept called synthetics. So real life assets are being represented on tokens, whether that's gold, whether that's the US dollar, or whether it's even like Apple or Tesla stock. That's all being represented on blockchain through different means of, and I don't want to get too complicated,
right.
But different means of like price feeds and staking and collateralization. So basically you can take all these assets, you make them secure, and then you make them tradable on decentralized exchanges. Right. And that means anybody with a wallet can trade these assets. And they can trade at any time. They don't have to log in anything. As long as they have the wallet, they can trade. And again, this is again so crazy in 2021 because there is a derivatives market forming as well. You can do options trading. You can do Forex exchanges getting launched soon with INJ. Yeah, so there's a lot of different projects that are popping up. And these projects, by the way, are where all the yield is. So a lot of the synthetic projects are up about 500% just in the last 3 months alone because people are already invested in Bitcoin and Ethereum. They need other places to now put that money, right? And then one of those areas is the synthetics that we're talking about right now.
So what holds it all together then is blockchain?
Yep.
Because blockchain is the contract. Well, that's why I understand it.
Blockchain makes it not just secure, but like transparent, and then you can audit the code. You can see like everything is reasonable and not like suspicious.